Let's shift focus to another stock that's on our radar, KEC International. They have won a couple of orders in the past few weeks, and joining us now is Ramesh Chandak, Managing Director of KEC International. Mr. Chandak, can you take us through the recent orders, the one from the transmission line between I think Aurangabad and Bhusawal, as well as some order you've got from Brazil?
Basically, I think these are the two recent orders which we got. One is a transmission line for the Maharashtra state, which is somewhere between near close to Aurangabad and close to Shirdi in that belt. And it's a very important line because it's a very large order. Particularly any ACB order of 350 crore above is a very large order, and it's a 357 crore order. So it's a very good order for us, and particularly Maharashtra is a home state, so it is more important for us. Similarly, there has been a lot of developments in Brazil, and long transmission lines are coming, and we received one order, which is again a very important order. Most of the transmission lines are private transmission lines as of now in Brazil. And this is one of the private transmission lines which has given this order of almost 180 crore and plus. In addition to that, we had recently announced some orders in water also. We just started the water division, and we got our first order of 31 crores from the MP state. Okay. So overall, I think
Mr.
our order book has been very good.
What the order book when we spoke to you in March was around 8,000 crore. What does it stand at now?
Now the order book will be around 7,700 crore because our execution in the last quarter was very high, particularly in the month of March. So right now the order outstanding will be around 7,700 crores, including these new orders.
Mr. Chandak, hi, morning. Can you tell us a little more about the breakup in the order book? I'm interested to know what the water business is looking like. What could the orders look like in the next maybe 4 or 5 quarters? Anything in the pipeline? And also about 50% of your revenues comes from the international market. Would you see a higher contribution of it coming from the international markets going forward?
I think the first talk about the water, we just started the water division. So we expect that the water division orders will pick up during the next 3-4 quarters. But of course, I mean, you cannot say very big size. By the time it really becomes very big, it will be more than, I think, 8 to 9 months down the line. One thing is very clear, that the water as a business is very big. The opportunities are very large. We are on the right track. We have the right team in place. So hope that that will really emerge in over a period 6 to 8 months time. But of course, we are seeing that next couple of quarters there will be some orders flowing, and we are somewhere L1. So I think we are likely to get some orders, more orders on water division.
Would your margins dip a bit because of the water business? You were doing a little south of 10%. You all are doing between 9.5 and 9.75 in terms of operating margins. Aren't margins in the water business a little lower?
Yeah, but I think if you look at the size of the water business in the total business, the impact will not be there. Okay. So I still always maintain that the margins will be in and around 10% going forward. And I think that has been the one constant feeling of mine, which I always express, that in a large infrastructure company, on a long-term sustainable basis, margin will be plus minus 1% or 10%.
Mr. Chandak, just coming back to that question, you were telling us about your overseas business, that 53% and whether it will increase. The reason I ask is because you had bagged that huge order from Kazakhstan of almost about 950 crores or so. When does that really start to show up, and any more orders like those that you're looking at bagging?
No, those are one-off orders, because normally you don't expect an order of 900 crores so easily. So I don't think that there will be a quick repetition of that kind of order. But overall, I am seeing that a lot of growth prospects in the international market. We are seeing a lot of inquiries, particularly in Central Asia and North America as well as the Latin America. Also, that Africa market is at the South Africa side, Saudi Arabia side is booming quite very good. So when we look at overall market of ours, I am seeing a lot of growth in the international market, but so is the case with Indian market, and we have seen that not in this month, but earlier months we have picked up some almost 4 or 5 orders from Power Grid.
Actually, that's what I also that the Mr. Chandak, that's exactly what I want to ask you. The Middle East is finding its own political issues. Are you seeing any stoppage or drying up of orders or cancellation of earlier orders in that area? Are future bids and tenders petering out? And even within the Indian space, there are frequent complaints both by policymakers as well as by industrialists that general capex flow has dipped. Do you see the pace of orders, slowing down at KEC?
Not really. See, I mean, you see in the context that how much generation we added in the 10th plan, how much we are adding in the 11th plan, it is much bigger than 10th plan. Now, what we talked about 11th plan, we have not added that. I don't think any of us have planned that that kind of growth will come and that kind of orders will come. So when we talk about growth, when we talk about our incremental business, we always discounted whatever figures we had on the 11th plan and whatever figures will be in the 10th plan. But we have to see in absolute numbers that 11th, the 10th plan we had 23,000 megawatt, 11th plan we are talking of 52,000 megawatt. So almost the business is double in the 11th plan. So will be the case in the 12th plan. So I'm not seeing any slowdown in India. Maybe slowdown in relation to the expectations which we had. But in absolute number, there is a lot of growth in India happening. A lot of growth will happen.
But yet your last revenues actually showed a dip. Both year on year and quarter on quarter, your last revenues showed a dip. And even the previous year, your increases were up to the extra revenue grew by about 10%. So what will FY11 end in terms of revenue growth, since for at least one quarter you did show a dip?
Yeah, I mean, we don't give the guidance, I won't say how much, but particularly for 11-12, I can see that we never had in the beginning of the year such a large order book. So okay. 11-12 very clearly sees that a lot of growth will come in 11-12.
Sure. So one final question from my side would be more on the profitability front, because you've been getting hit because of higher interest costs post your SAE acquisition. Can you tell us more about how much your interest costs will continue to be? Currently, I think there's been a 30% increase in your interest costs. Where does the debt stand currently, and what about the interest cost?
See, when you look at that, our interest cost has every year has come down as a percentage of sale. Our interest cost is in around 3% of the sales. I don't see any dramatic change happening as a percentage of sale interest cost going up. So as the interest cost goes up, naturally our working capital is improving, our overall efficiency is improving. So as the impact on the sale as a percentage of profit is not there.
All right, Mr. Chandak, thanks so much for joining us on the show. That's KEC International, up almost about 2.5%.